Good morning to all traders and welcome to our daily Market Insights video. Markets ended mainly mixed yesterday as we had a light economic calendar and equities saw a halt after Friday's risk flows. As the Bank of America reported their earnings reports for Q1 yesterday, and that was a little disappointing. Now, the Aussie fell a good 20-30 pips this morning as RBA comments about softening inflation indicated that there might be a rate cut. Now, markets are indeed quiet this morning as well, but prices trade near major psychological levels on both the euro dollar and also the Aussie dollar, and that is indicative of potential good moves. Now, today is the Tuesday, April 16th, and we're expecting the UK's climate count change, the geoeconomic sentiment indicator in Germany as well as Europe, foreign security purchases in Canada, and manufacturing sales, as well as the Fed industrial production. And later on the night, we have the CPI inflation quarter-on-quarter and year-on-year for New Zealand. Note that none of the recommendations here constitute investment advice and losses can exceed profits. I want to start with euro dollar, and we are on the daily chart. We talked about this impulse and this downward move, and what we're potentially looking now in the medium term is for prices to break below outside this triangle pattern, okay, for a downside wave that would complete this triple combo. We do get some supportive signals for both MACD and RSI. So down on the 4-hour, we also get some supportive signals here and recent as well. We are trading within a descending channel in the medium term and in an ascending channel in the short term. Okay, we have moved in an impulse to the downside, and now we have probably ended the correction up to just above 113, which is a very strong psychological level. Price is now flat with that level, and that have remained around it, which is also the movement, the sort of it's the 50% of this channel as well, okay, the moving average. Now, from here, we are also halted by the 50 Fibonacci retracement, okay, which is the Fibo from the high of 114.50 to the low of 111.86. So this is a good confluence level, okay, and that makes it a little bit more strong, more critical. On the 1-hour chart, we've seen that this correction to the upside, the ABC pattern, is the 113.21, is the 161 extension of this first wave, okay? And that's why we saw the reversal here. We have a pretty much double top here, and we're looking at prices to move lower. Bounced at 1.1289, which is the Fibonacci extension, 100 Fibonacci extension, and could be looking now for prices to move to the 161 around 1.1269, okay? We get this supportive move again from the RSI and MACD, and of course, don't forget that will also depend on the geoeconomic and sentiment indicator. The release is in a few hours and is going to affect the markets, obviously. Don't forget that despite all that bearish evidence, we are still sitting above, okay, above a previous resistance, and we haven't retested it yet properly. So we could see prices either bouncing off at this level or just breaking through and heading all the way down to this ascending trend line. Now let's jump to Aussie dollar, because it's also trading around a psychological resistance level at around 1.7150. Okay, there was a rejection at 72 cents the other day. Here we're also moving on a longer time frame in a correction move, okay, ideally. So we had the impulse wave to the downside, and now we're looking to move all the way up. We had the first wave completed, second wave completed, and now we're looking for C, okay? But, of course, we need to break above that level. For now, we have a rejection. Prices could move all the way down to 0.7072 or even to the 70 cents barrier, okay? So we get a bullish signal here, which has already been completed, in my opinion. On the 4-hour chart, we also get some bearish signals here. We completed some waves to the upside, some waves to the downside. Okay, we are in corrective mode as we speak, and completed that over here around 72. At the same time, this is also the top of the ascending of this triangle pattern. Okay, this rejection, and we moved right towards the middle of this, the middle level of this ascending channel. Okay, so now we can be looking for prices to correct a little bit higher and then move a little bit lower to complete this sort of correction from the impulse wave from around 0.70 up to 0.72. This is probably 200 pip impulse wave to the upside. Okay, now down on the 1 hour just quickly as well. Here we get some supportive signals as well on the MACD and RSI. We are indeed palm bounced off on this channel stop, and looking for prices now, moved all the way down, looking for prices to come correct at this probably confluence level, because we've got the middle line of this ascending channel as well as the descending channel of the triangle, the longer term, coming in a confluence around that level, okay? So don't be surprised if prices move a little bit higher. That rejection over here will be the point where bears will most likely step in to send prices lower. If, of course, we see in the upside move, we could just see prices breaking through outside the ascending channel, you know, and heading to the 71 cents without any sort of even marginal correction. Thank you very much for watching us for one more day. If you like our video, hit the like button. And don't forget, as always, visit our blog. This is where we'll cover the latest news. We'll provide trading ideas and also, of course, all the necessary tools a trader needs, serving you responsibly.